Assalamualaikum and hi, my name is Azmina Khadijah binti Muhammad Azam.
Assalamualaikum and hi, my name is Nur Shabiha binti Mahazir.
Assalamualaikum and hi, my name is Aisyah binti Sharon Fitri.
Hi, my name is Nur Farzana binti Subri. Now, I will explain the introduction section which outlines the main concept of our topic. In the context of Islamic financial system, offering financial solutions that adhere to Sharia principle has become increasingly important, especially as an alternative to conventional systems that are heavily based on interest or riba. One of the key areas of concern is the credit card system, which in the conventional model typically involves charging interest on outstanding balance. To address this issue, Islamic banks have introduced Sharia-compliant credit card financing based on the concept of Tawwaruq. Tawwaruq is a financial mechanism that allows individuals to access liquidity in a permissible manner by using a series of buying and selling transactions. Instead of lending money and charging interest, the bank facilitates the purchase of a commodity on behalf of the customer, sells it to the customer at deferred price, and then leases it to a third party to generate cash. Although Tawwaruq may function similarly to a conventional loan by providing cash, it avoids riba by using lawful sale and purchase contracts. Therefore, it offers a Sharia-compliant method of accessing credit while preserving the legal and ethical principles of Islamic finance. Next, I will pass it to my teammate to explain the next section.
Now, I will explain the two main issues in Tawwaruq credit card financing. Basically, Islamic banking provides financial services that avoid riba or interest, which is clearly prohibited in Islam. Tawwaruq is a financing concept used in Islamic credit card where the bank purchases a Sharia-compliant commodity and sell it to the customer at a profit on a deferred payment basis. The customer, through the bank acting as an agent, then sell the commodity to a third party for a cash. This method helps provide financing while avoiding interest-based transactions. This system looks good in theory, but there are some problems with how it is used in real life. I will explain the two main issues. So, the first issue is the relationship between the bank and the broker. In many Tawwaruq transactions, the same broker is used for both buying and selling the commodity. Everything is already planned and automated from the beginning. This makes the transaction look more like a way to give cash and take extra payment, which is similar to an interest. In this case, the commodity is not important at all. It is only used to make the process look halal, even though it may not reflect a real trade. Scholars say this process is very close to buy-enough, which is not accepted in Islamic finance. So even if the transaction follows the rules on the paper, it might still go against the spirit and true purpose of Sharia. The second issue is the uncertainty in ownership of the commodity. The customer does not take physical possession of the item. The entire process is handled by the bank, and the customer might not even know what the commodity is, where it comes from, or whether it even exists. This lack of clear information goes against the Sharia rule that all parties in a contract must fully understand the term and condition. There are also concerns about unclear fees or late payment charges, which can cause confusion and unfairness to the customer. To sum up, even though Tawwaruq offers a way to avoid interest, it still has some serious issues that need to be fixed. It's important to make sure that these financial products are truly following the values of Islamic finance. Thank you for listening. Now I will pass to the next presenter who will explain the analysis and view from scholars.
Modern Islamic scholars have strongly criticized Tawwaruq. Among them are Rafiq Yunus al-Misri, Sami al-Suwailim, Saleh al-Hussein, Hussein Hamid, and Abdul Ajaba al-Subani. The Islamic Faith Academy discussed Tawwaruq in its 15th session in 1998, proving it with strict conditions, especially that the buyer must not resell to the original seller to avoid buy-a'inah. In 2003, the Academy distinguished between organized Tawwaruq used in Islamic banking and real Tawwaruq. Organized Tawwaruq was deemed too close to Bai' al-Ina and therefore unacceptable. Classical scholars from the Hanbali and Hanafi schools prohibited Tawwaruq. Notable voices include Ibn Taymiyyah and Ibn Qayyim from the Hanbali school and Al-Haskafi and Imam Muhammad from the Hanafi school. While some forms of Tawwaruq have been conditionally approved, both modern and classical scholars express significant concerns, especially over its resemblance to controversial sales practice.
Thank you. Next, I'm going to discuss our critical review from muamalat perspective. Firstly, avoiding the use of the same broker for purchase and resale. To ensure Tawwaruq-based transactions stay within Sharia guidelines, it is essential that customers do not use the same broker, especially the one arranged by the bank, for both buying and reselling the commodity. Letting the customer independently choose a different broker or buyer ensures that the transaction involves the real risk and market exposure, which are core elements of a valid muamalat contract. This approach avoids turning the process into an automated and pre-arranged loop, which can resemble a buy-ina or riba-based loan, which both are widely rejected by Islamic scholars. By allowing the customer to initiate the resale themselves, the transaction becomes a genuine trade. This is not only complies with legal Sharia requirement, but also aligns with the Maqasid Sharia or ethical objective of Islamic finance, like promoting fairness, risk sharing, and also integrity. Therefore, it is critical to separate the brokers to maintain the Sharia validity of this transaction. Secondly, changing to a control commodity platform as Bursa Saham Malaysia. One effective way to reduce uncertainty, which is gharar, in Tawwaruq-based products is to use a regulated commodity platform like Bursa Saham Malaysia. This system offers structure and transparent transaction under regulatory supervision. Through Bursa Saham Malaysia, customers receive clear ownership of the commodity and it also confirmed in writing. They also gain full visibility of the sale details such as pricing fees and profit margin to ensure the transparency and the eliminating hidden terms or confusing cost structures. By operating on an open platform rather than behind closed doors, the process becomes more participatory and informed. This enhances both the legitimacy and ethical soundness of the contract, fulfilling Sharia principles such as transparency, mutual consent, and fairness in dealings.
Tawwaruq replaces interest-based lending with a series of sale and purchase contracts, offering a Sharia-compliant path to cash access. Despite being a legal alternative, both classical and modern scholars raise ethical concerns, especially with Tawwaruq Munazam or organized Tawwaruq. Some scholars and institutions have approved Tawwaruq conditionally. Strict compliance with Sharia rules is essential to its legitimacy. The study proposed two key reforms using regulated platforms like Bursa Malaysia for transparency and avoiding the same broker for both buying and selling. Tawwaruq can support Islamic finance if implemented with honesty, transparency, and ethical commitment. Upholding both the letter and spirit of Sharia is key.